Welcome back to the second session of the Central Arizona Vita Network Vita training sessions. This will be the first segment of the second session. What we're going to do in this session is talk about the intake and quality review. We're not going to take the intake test. You're going to do that at home. And then we're going to cover filing status, dependents, income, and that should end session 2. So I'm going to skip right ahead to where we left off. This is the intake and interview and quality review sheet. Our whole objective is to do an accurate tax return, and this all begins with the client filling out this sheet and then us asking follow-up questions. Now, by the way, I told you earlier that you're going to start, hopefully tonight, you're going to start getting into the practice lab, and in the advanced scenarios, advanced scenarios 7, 8, and 9, you have to do a tax return. And I said, at least get those started, putting in the name and address, and you're going to have to put the birth date and social security number. So a lot of that information you need is going to come from this intake and interview sheet. You'll find these sheets in the test booklet right at the end of the scenario. It gives you a fact pattern, and then it gives you documents like a social security card, and then you'll see one of these intake and interview sheets that has a lot of the information that you need for doing it. So right here, you're going to see here's where we put in the names. Now, Gene reminded you that the names, IRS, one of the biggest reject reasons we get is because the name didn't match the Social Security database. When it got e-filed, the computers at IRS check it across the Social Security database. And if you fill out Jim Simpson and the Social Security database says James Simpson, it rejects. So you want to be really careful and take it right off of those cards when you put in the names. You can see lots of other things on here. Sorry, I'm going to go back up. Sorry about that. Here's where the date of birth is and their occupation, address, and all of that. Now, before I move off of this, here's where we help determine their marital status. Now, this isn't what we call filing status, and a little bit later we're going to go over that, but this is information that helps us determine what their official filing status is. And then down in this section is where they put in dependents. And we ask them, list everyone who lived with you. That doesn't mean they're going to be their dependent. They're going to answer these questions right over here. What's their relationship? How long did they live in your home? Were they a full-time student? And then see this gray section over here? When we're interviewing them, we fill in this information. We're asking them, did this person have less than $4,300 of income? A little bit later, you're going to see why that's an important question. But when we're interviewing, we fill in these questions so that we can do it. On the second page is a whole variety of questions, but with each question, you're going to see these little codes in parentheses right here, which tell you what the certification level is if they answer this question. Like down here, it says, did you have self-employment income? And here you're going to probably have to be an advanced person to be able to do that. If they just have W-2s, it's just a basic return. You could have basic certification and do that. Down underneath, it's going to ask, did you have any rental income? And then it's going to tell you that you have to be military certified to do that. Okay. But taxpayers, so on this, I'm going to back up here just a second. Look at the 3 columns of answers. Yes, no, and unsure. And we'll have taxpayers, hardly one comes by that doesn't have at least one unsure on it, that they're not sure about it. We have to, when it comes up unsure, we have to discuss these questions with them, and we have to change that unsure to a yes or no. That's something that's absolutely critical that we do. We discuss the questions and we ensure that the answers correlate with the documents provided to us, and we drill down and we ask further questions. So as I just said here, on this one, the taxpayer said, didn't know if she'd gotten a 1099 INT or DIV, marked it unsure. We're going to talk to her and we're going to say, well, did you have a checking account or any brokerage accounts? Did you own any stocks or bonds? So we ask them those follow-up questions. Oh yeah, I had a checking account at the credit union, but they didn't send me anything. Well, did you make any interest off of that? Oh yeah, it wasn't much. I got $9 of interest. See, we want to jot that down in the notes, because we're going to find out in a few minutes that, well, even though she didn't get a form for that, we've got to put that on the tax return for it to be an accurate tax return. And then we choose yes for this, and we change it. And usually I tell my volunteers, just initial it. That way, if they ever come back with a question, we know we actually did do something with this, and we know who changed it. So methods could vary from site to site, and especially these days, but generally we make sure that, and when I say that, sometimes if it's a walk-in site and they get there and your first customer of the day, maybe we go over the intake sheet with them and we kind of fill it out as we ask them the questions. Generally though, they're going to be the ones filling out pages 1 to 3 of it. Then they come and meet with the tax preparer, and then we go over all of those questions with them too. And this last portion, sorry, right here. At all sites, volunteers will complete the form with the taxpayer if they require assistance. We're going to find that in session 6 when we talk about customer service. We do everything, whatever we have to do to accommodate the taxpayer. And if they're blind or they're deaf or disabled or whatever, we've got lots of resources. We're going to help them do whatever we need to do to help them. So also, maybe they're, especially we try to recruit volunteers that have secondary language numbers. We get a lot of Spanish speaking people. I kind of speak Spanish, but I find there's a lot I don't know, but I usually struggle my way through and was able to do that. And hopefully at each site we'll have that. We do get, but we have this intake and interview sheet, both in Spanish. We have printed documents in Spanish. You can go online and you can get them in a variety of different languages. And I've had that last year. I mean, I had somebody from Kenya, and I forget the language now, but we had to get an interpreter, and I found a form, I had them fill it out, so that I could download it and help them. We do whatever we can to help people get it done. This is kind of, I say it's important because it saves you a lot of time. Sometimes we get tax preparers and they gather up all these documents and they start inputting stuff right as they're talking to the taxpayer. And then they get halfway down the interview sheet and they see, oh, they checked that box that says that they did some cryptocurrency transactions. We can't do this return, it's out of scope. So you just created this whole tax return in tax layer for nothing. And now we have to then go disable the return. So the point is you go through the whole interview so that you make sure we're going to be able to do this return before you ever start opening up the software. Make sure we've got, oftentimes, and this happens more than you'd believe, is we come across some of these questions. Oh, you had educational expenses for your 19-year-old son in college, right? Yeah. Well, did you bring his 1098-T and his statement from that? Oh, no. Did he buy any books? Oh, yeah. We spent a lot of money on books. And they have to go away and they have to get documentation or receipts so that we can properly do the return. There's no sense starting the return until we know we've got everything we can do to do it properly. Okay. The other thing is you want to go through the interview to make sure it's not above your level of, if you're just basic certified. Generally, we try to have the advanced people do the intake and interviews, but to make sure that they've got the proper certification. And as I said, bullet point 3 there, to make sure that the tax return isn't outside of the scope of the volunteer program. So we've already talked about scope of service. We only do those things that we're trained to do. And as I said, this slide talks about the city of Phoenix, because the majority of you are working for the city of Phoenix. They're very specific about what it is. And we're going to give you a sheet that tells you exactly. Different partners may have a little bit of different things, but whatever site you work at, for whatever partner you work at, they're going to let you know what's out of scope for them. We already showed you in the Pub 12, that's what IRS says is out of scope. And then some partners even restrict it a little bit further than that. So we said if there's any changes to after we've interviewed these folks, you know, they may come out, they may say, no, I didn't have child dependent care expenses, but then you're looking at it, they've got a 7-year-old child that they're dependent and both of them work, right? Oh, well, yeah, we paid for daycare after school, or they may call it something else, right? They may call it, we paid for the after school program. Well, that is daycare. They just didn't relate it to being daycare. So we changed the interview sheet so that we've got a good documentation of what we're doing on that interview sheet. Whoops. So as we said, you need to clarify questions to assist them in providing the accurate answers here. And this whole interview is really the key to getting the right information. So here's some questions that, like I just kind of gave you this one, or no, this one I didn't, sorry. Here's one. I see that no one else lives in your home. And they say, well, yeah, my father lives with us, but he's not my dependent. Well, and so they didn't fill it in that block. I mean, they're thinking that only goes for dependents. Well, we may find out that his dad qualifies as what we call an other dependent. We're going to talk about that later on today. And it says, so you only had income from your pension. Oh, well, no, I got some interest off of my stock account. Well, do you have that form? Well, I don't think I got it. You know, and then said, is it possible you check something that says they're only going to allow you to deliver it online? Oh, yeah. And they're going to have to go back and log into their account and print out the 1099 form. See why we ask these questions for that? And then, you know, we say, so no one else can claim you as a dependent. You know, if we get a college student coming in here and he says, I'm doing my own return, you know, well, we need to ask other questions because it may be possible that their parents are the ones who are entitled to claim him as a dependent, not him. And that depends on those other questions we ask, which we're going to go over a little bit later here. Be alert for conflicting information. Sometimes an entry on one part raises a question on another part of the form. For example, I see that you and your husband both work, yet you didn't indicate you paid any childcare expenses for your 3-year-old son. Or I see that you're over the age of 65, yet you did not indicate that you receive Social Security benefits. And you know, it might be possible that somebody's over 65 and didn't. For instance, I'm 66 and I'm not claiming them yet because I'm still working and I'm going to wait till I'm 70, right? But you want to clarify that. They may say, oh yeah, I'm getting Social Security. Well, did you get that SA 1099? What's that? Well, it's that little thing with the pink header across. Oh yeah, I got that. I thought that was just telling me what I was going to get for the year. And they may have to go home and get it or log into their Social Security account. So you see what I'm saying about how you got to kind of dig in a little bit? Here's another example. I see you answered no to the question, can anyone claim you on their tax return? However, you're a full-time student and you live with your parents. That's a big thing that probably says it's their parents that can claim them. And that changes everything around. As I said, we're trying to do an accurate tax return. And, you know, the way we do that is we go by what's on that intake and interview form, that form 13614. We look at the documents that's provided. We interview the taxpayer about those documents. And then we know what we can put into the tax software is accurate. And you'll find that the tax software does a whole lot of the work for us, right? As long as we input it correctly.
Can I ask a question?
Yes.
So if they're able to access any of this information online, are they allowed to do that at the Vita site, or do they have to go home and do all that?
That's a great question, Jennifer, and it depends on the site partner that you're working with. And because, for instance, maybe they're working in a room that only has computers for the preparers. right? And we're not going to stop. Well, I'm not going to say not. It depends on how busy you are, and that's going to be your site coordinator's decision. That we stop doing a tax return and help them log on to their Social Security account. In my Scottsdale Community College site, I had a couple computers set off to the side, and we would allow them to log in there and try to find it. But some sites may not have enough computers to do that, or they may have security restrictions that don't allow it. It depends on the partner that you're working, but it's a great question, Jennifer.
Thank you.
Good. Okay, so this is kind of a graphic showing that all of these things, the source documents, the intake and interview sheet, tax return, this all goes, and then it gets a quality review. And everything goes to the quality reviewer. The quality reviewer has to be somebody that is at least at the preparer certification level or above. And generally, we try to have people reviewing the returns that have more experience, that could do it. And some sites, they'll actually designate people to be just quality reviewers so that they get really good at it. But again, our whole thing here is just to do an accurate return so that they don't run into any problems. Okay, so here's an example of it. During the 2018 filing season, we found that those who use the intake and interview form, and by the way, it's required, but it generated a much more accurate return. And overall, the return accuracy rate for Vita sites during that 2018 filing season was 93.3%. That other figure that I was showing you, the 77%, those are people who filed it on their own or whatever that, that IRS had to go back and ask qualifying information or whatever for. It wasn't an accurate return. So if we were in a live class, we would probably just turn the computers over and have you start taking the intake and quality review test on the Lincoln Learn website. But we're going to go over a few things here with you first. And so we first want to wish you a happy.
What was the publication that was just listed on that for the thank you?
It says publication 6744. That's your test booklet. And I'm going to pull that up in just a second here. Okay, so, and we're going to kind of go over a few of those things here too. Here, in fact, right now I'm going to pull it up. Okay, so here's 6744, and over here on the left is that table of contents. And we're going to go up here. Here's the intake and interview quality review and questions right here. So there's 10 questions right here. And then there's 10 that's on the retest. And I'm going to suggest, even though you're going to find these are pretty simple, right? And most of it's kind of common sense. I would go answer these in pencil. And then when you pull up and you take the test, you got this in front of you, you just go answer. Every question that they throw at you is either going to come from the test or the retest. So you will have answered it already. You don't really need to think about it. In fact, I'm going to tell you, as a test taking strategy, you go through this booklet, you answer the questions, and don't double think yourself when you go to actually take the test and say, oh, did I think about this wrong? What if it's that? Go with you. You've already answered the question. Okay. And unless something comes up that you're absolutely sure of, like you see, oh, they're asking which is not one of these, and I answered it to which is one of these. Well, then you know you got to go change it. But unless you're absolutely sure, just mark it in what you put on there. Okay. So let's just look at a few of these questions. We're not going to give you the answers to it, but I'm going to tell you where you might find, most of them I think are going to be pretty common sense. And with those slides we just went over, I think we pretty much answered everything here too. So this is saying somebody participates in the Vita program. Oh, by the way, Vita TCE, you're going to see that referred to a lot. They're companion programs at the IRS. Vita is volunteer income tax assistance. TCE is tax counseling for the elderly. And so AARP kind of falls under the TCE category, but we all take the same test and we all do kind of exactly the same thing. Okay, there's really little or no difference too. But this is saying all volunteers participation have to use this form 1364 and with an effective interview for every return prepped at the site. I think you guys know the answer to that, right? What should they do before starting the return? One of the slides I just went over told you that too. You see what I'm saying? This is not difficult. Vita sites are required to conduct a quality review. I've kind of told you what the answer to that is.
Hey, Jim, you might want to cover number 5 about unusual or questionable.
Yes, and it's a really good idea. And I just saw that and I thought this is a great one to do it. So 5 says, you do not need to see proof of cash donations made by a taxpayer if you feel that the information is not unusual or questionable. Now, what I'm going to tell you in general is we are not auditing their tax returns. Okay. We take them at their word for what they say. Now, that being said, if they tell us that they have $275 in cash contributions, we don't say, well, okay, go find us the receipts and prove it, right? Take them at their word. On the other hand, if we say, well, okay, did you have any cash donations? Oh yeah, I had $275. How much am I allowed to claim? And we say, well, if you're taking the standard deduction, you can claim $300. Well, put down $300 then. Well, no, now that makes me feel uncomfortable. They're just making up a number. And I'm going to say no. You do not have to do any return that you're not comfortable with. And we want to do an accurate return, but we're not auditing them either. So we take them at their word of what they said. But let me stop right here, because you're going to hear me say this 3 or 4 times over the next 3 or 4 days. Every return, we must tell them, and I usually tell them at least 3 times during the process, you are responsible for everything that's on this return. We're just putting in what you tell us. If you get audited, you're going to have to provide proof of your answers to it. And we have to do that when they sign the return, so that we make sure that they know what they're signing. But every time I come across even something that I feel, okay, no, I don't have to have receipts, but I take that opportunity right then to remind them that they're responsible for what's on the return. And that IRS is going to ask them, not me, if it gets audited. So, but then, as I said, if you feel that they're making something up, don't do it. First of all, get the site coordinator. Don't tell the client that I think you're lying. I'm not going to do this in the return. Just say, hang on a second, and go over and talk to the site coordinator and kind of whisper in their ear what's going on, and let the site coordinator handle it. And sometimes that is a few times I found a couple of angry taxpayers, right? And then we talked about Gene talked about in the volunteer standards of conduct exam of how there's kind of a blacklist of people who've been put on the IRS's, for preparers, right? If they do something wrong. Well, among us partners, we tend to have kind of a little communication among us, because we find some of these people start shopping returns around. They don't like the refund they got here, so they'll go to another site and then just not tell anybody everything. And when we see that happening, or we suspect it's happening, we kind of let everybody know, beware of this person, so that's good. Something I don't think that I said, but part of the requirements in this process, when I went over the process, we have the greeter screener that does it. Everybody must show proof of who they are and bring their social security card or an official document that has their social security number. And those are few and far between these days, but I'll give it. In other words, IRS wants us to really confirm we're doing the return for the person we should be, because there's a lot of fraud going on these days. So they got to bring a photo ID. They have to bring their social security card, or, as I said, an official government document, such as the SA 1099 is a social security statement. And up till now, they give us a social security number right on that statement. That's an official document, and we can use that as proof. Medicare cards used to have them, and they might bring in an old Medicare card that has it, but Medicare started issuing a different number. Social Security says they're going to stop putting that full social security number on those forms, but so far they haven't. Okay, so but those are proof. They could have a letter from Social Security saying, here, they've applied for another card and this is their number. We can accept that. Sometimes they come into the site and they say, well, I never take that card out of the house. I don't want to lose it. Well, have your son or daughter take a picture of it and we could use the picture of it, but they have to have proof of that. Anything else I need to cover, Gene?
I was going to say, I think I'll probably think of something after we're done.
Okay. As I said, most of these are common sense, and you can go back through our slides and you can see that. Now, I think Gene kind of covered this, but when you go over the retake questions, like question 1 is going to be just like question 1 on the other one, except they change the format. You know, it might be true and false on the test, but then they make it A, B, C, or D on this, but it's covering the exact same material, right? Okay. So I think that this is all I wanted to go over there. And so I'm back at our training. So Gene, do you want to cover who must file and who should file? And then I'll cover dependents.
Oh, okay.
Okay. Just so we switch off, they don't get tired of my voice so much. Okay. I'll stop sharing and let you pick it up.
Okay, I think we're ready to start this. Who must file versus who should file. In your Pub 4012, there's a chart. We already ran across it when we were doing the live version of looking at the 4012, but that chart is who should file or who must file. So if you're a head of household and you're under the age of 65 and you have a gross income greater than 18,650, then you're going to have to file. And the government's going to want to see that filing. But in order to decide that, you're going to need to know their filing status, their age, and their gross income, and if they are claimed as a dependent on somebody else's tax return. So those decisions all relate. You have to know four pieces of information in order to determine if they must file. If they have the income that exceeds the gross thresholds, if they have net employment earning of $400 or more, if they receive disbursements from an HSA or the advance payments from the premium tax credit or the advance payments of the child tax credit, then they have to file. The premium tax credit, that came out of the Affordable Care Act, or known as Obamacare. That's a process where we guessed when we enrolled with Obamacare, we guessed at how much we were going to earn for the year. But now that we're filing our taxes, we know how much we earned for the year. So we might get a premium tax credit. We might have gotten some support from Obamacare based on our guess. And if we actually earned less than what we guessed, they owe us some more money, and that's a refund. But if we earned more than what we guessed, then we're going to have to pay them back some money. And so that's a premium tax credit payment. The child tax credit this year, people received half of their child tax credit. They could choose to receive half of their child tax credit between July and December, and the other half they would get on their 2021 tax return. If they chose to get those advance payments, they must report their taxes. It's not an option for them. For Vita, especially for City of Phoenix, I don't know about the other Vita partner sites, but I do know for City of Phoenix, married filing separately is simply out of scope for us. We don't have to worry about that. Well, if you had income tax withheld if you made estimated payments, if you qualify for credits, if your federal return may be required for some Arizona credits, which we know they are, and you want to make sure that nobody files a return with your Social Security number, then those are all things that really are reasons why we should file our federal and state tax return. For instance, that number 4, Maricopa County allows seniors to freeze their property tax credit. That means their property tax credit, or excuse me, their property tax rate will not increase. But in order to apply for that, you have to show 3 years of federal income tax returns. Well, if you're a senior and you're living on Social Security, you don't have to file a tax return because your income just from being Social Security would be 0. And so you don't file. Well, if you don't file, then you can't fill out an application for freezing your property tax rate with Maricopa County. Number 5, really, with all the identity theft that's going on in the country, this is important. So for so many years, so many seniors were told, hey, you got Social Security, you don't need to really file a return. The problem is that means their Social Security number is floating around out there, and it's not tied to a tax return. We have discovered that as we get people to file returns, they get rejected because the IRS says somebody else already filed a return with that Social Security number. That's a real problem. This is the irs.gov interactive tax assistant. We mentioned it earlier. Just wanted to come back to it here because you can go to irs.gov. This is the page that shows up, at least this was the page a few months ago, and click on the get answers to your tax questions. And then it brings up a search box and you can type in your question right there and they'll probably run you through a series of questions. The other thing is below that at the bottom of the screen, you'll see most popular topics. Well, that first one is, do I need to file a tax return? And they'll ask you some questions. Your response to them will determine, and they'll come back and the answer to you will be, yeah, you need to file a tax return, or no, you don't need to. So it's an easy way to get some additional help. He sure looks disgusted. So Bob's 27 years old. His gross income was $17,000. Just based on that information, do you think he's required to file a tax return? What do you think? Yeah, and the reason he is because he is 17,000 exceeds that 12,550 standard deduction. His gross income was greater than his standard deduction. So he's going to be required to file. Well, shoot, I hit my wrong arrow button here. So Janet and Harriet are married and filing jointly. She turned 66, he turned 64. Their income was $19,800. Based only on that information of their age and their gross income, would they be required to file a tax return? Give you a second to think about that. No. Married filing jointly, if you took 12,550 and you multiplied it times 2, you'd have, what is it, $25,100 or $25,500? I've forgotten the number now, but that would be, you would need, your gross income would have to exceed that $25,000 figure in order to have a requirement that they file their taxes. So Juanita has a dependent child. She filed as a qualifying widow. Her gross income, based on this information, is she required to file a tax return? let's see here. Head of household, $13,900 in gross income. Well, she's got more than a single person's requirement as gross income of $12,500. But if her household filing status is head of household and she had $13,900, is she required? No, because head of household's filing status is like 18,000 plus. Head of household is about halfway between single and married filing jointly, if you'll think of it in those terms. So Melvin's 20 years old, single, US citizen with a valid social security number. Melvin's only income was $14,750. He lived with his parents all year, but they will not claim him on their return. Is he required to file a tax return? Well, you could always check chart B in your 4012 to determine that. Yeah, he's single and he earned $14,750, which is more than $12,550. Oh, we saw that. I'm going to have to get rid of some of these cartoons that have doubled up. Remember, this is that basic information page that has the menu for filing status, personal information, and dependents. So here we are with filing status. And on the intake interview sheet down here at the bottom, this filing status is not the same as what's on the intake interview sheet. This one says single. Up here, it talks about unmarried. That's a terminology change that occurred 3 or 4 years ago. Essentially, if they're unmarried, then are considered single. Sometimes it says never married. That gets confusing to people. We're after single. Married filing jointly. We don't worry about married filing separate. Then there's head of household and there's qualifying widower with dependent child. A qualifying widower, the federal government looks at it this way. If your spouse dies in tax year 2021, you may file in tax year 2021, you may file as married filing jointly. There will be no change in your filing status in the year that your spouse died. If your spouse died in that year and you have dependent children, then you become a qualifying widow for the next 2 years. So in 2021, you would be filing married filing jointly, even if your spouse had died sometime during the year. And in 2022, you would be classified as a qualifying widow or widower because you had dependent children. And you could do that again in 2023. The way the rules are set, you can have qualifying widow status with a dependent child for 2 years after your spouse has passed. And then your filing status returns to single. So this is the actual screenshot where you plug in the value. And tax software even gives you a wizard over here. So if you're not real sure, you can click here and they'll ask you some questions to help you determine which is the appropriate filing status. I've used it before, especially when I was first starting out in TaxSlayer. It takes up some time, but now I feel more confident about what I'm doing, so I don't use it as often. But here's the deal. When you make a decision on this page, a lot of software calculations are chosen. In other words, once you decide that they're single or married filing joint or head of household or qualifying widower, and you hit the continue button, a lot of the software calculations are already now set in place. This is one of the 2 big decisions that we have to make as preparers. So here's that tab B interview section about determining filing status. And it's always good to walk through it with the client, because then the client sees and hears and begins to understand how you determined what their filing status was. Here's the decision tree that's also available. I tend to like this one better than the interview, but my wife likes the interview better than the decision tree. So a couple of chances here to kind of probe our mind. Alexandra's younger brother, Sebastian, is 17 years old. Sebastian lived with his grandparents for the first 2 months of the year. And then from March through July, he lived with Alexandra. So that's March, April, May, June, July. So that's 5 months of the year. So then Sebastian moved in with some friends, and he stayed there for the rest of the year, which would be August, September, October, November, December. So 5 months with his friends, 5 months with Alexandra, 2 months with grandparents. Since Sebastian did not have a job, Alexandra gave him money every month. Assuming Alexandra had no other dependents, could she file as head of household? I'll give you a hint. Because I counted out how many months he lived with Alexandra, that will determine whether or not she qualifies as head of household. And the reason is you have to live with her 6 months or more. 6 months or more in the household to be a dependent. We'll get into dependence in a little bit. So Jane's husband moved out of their home in February. He has not returned. Jane provides all the cost of keeping up the home for herself and her 2 dependent children. Jane refuses to file a joint return with her husband. What filing status should she use? Well, wait a minute. She's married. It should be married filing jointly. She refuses to file a joint return. Well, can she do that? Yeah, she can. If they have lived apart for the last 6 months in the year, then she may claim head of household. The last 6 months. So before we were talking about, in order to be a dependent, you had to live with the taxpayer for at least 6 months of the year. For head of household, if you're married and you have dependents, you could claim head of household if you lived apart the last 6 months of the year. Tanya's divorce became final in early September. She has sole custody of her 3 children who lived with her the entire year. The children are all under age of 19. She's provided more than half the cost of keeping up the home. What filing statuses can she use? Head of household. She has dependent children. Sydney's spouse died 2 years ago in January. He filed a joint return for that year as the surviving spouse. Since then, Sydney has not remarried. He maintains a home for his young children who lived with him all year, and he provides their sole support. What filing status Sydney should use? What filing status Sydney should use? That's not grammatical. Somebody needs to fix that slide. Oh, that'd be me. Never mind. All right. Any chances here? Yeah, I thought you would know that. Qualifying widower. 2 years ago in January. So he's in that 2-year section. Okay. I like this cartoon. The final statement. Go ahead.
I'm going to jump in here just for a second and tell people about this qualifying widower status that I think I've seen 2 in my lifetime. Okay. But there is a question on the test about it. So you need to be aware of it, and you need to be able to calculate and think about, oh, that 2 years, and look at the facts and say, You know, don't just jump to conclusions about things, right? Really look it over.
Okay, we mentioned social security numbers earlier. We want to also make sure that you understand what an ITIN number is. An ITIN is an individual taxpayer identification number. It helps, they issue ITINs to individuals to help comply with US tax laws and to provide a means to efficiently process and account for tax returns and payments for those not eligible for Social Security numbers. An ITIN is only applicable to individuals who cannot get a Social Security number. An ITIN is a letter or a card and has verification, and the number begins with 9. So any Social Security number that you see that begins with a 9, it's not Social Security, it's an ITIN. Now, if a client comes to us and they have to apply for an ITIN, we can help them with that. There is a form in TaxSlayer that we can fill out, but then their return cannot be e-filed. It becomes a paper file only. And the reason it becomes a paper file is because they'll have to go someplace to get their documents certified as accepted. So it takes up time. We can do it, and we do it for free. An ITIN not used on a federal tax return at least once in the last 3 years is going to expire at the end of 2021. And I put this last sentence in here that all the ITINs issued before 2013 with the middle digits of 88 have expired. And then, let's see, oh, I guess I left that slide out. I took it out. The thing is that Congress passed a law directing the IRS to go back and verify ITINs, to check them out, make sure that they were legit. And so for the past 4 years or 5 years, they have been setting aside a certain number of ITIN numbers that with the middle digits of 88 or 89 or 90 or 91 or 92 or 93, et cetera, up through 99, have to be reapplied for so that they can be rechecked and verify that these are actual ITIN numbers and that they match up with that particular client. They've completed that. 2020 was the last year they did that. So at this point, I think the only thing you're going to run into will be an ITIN number that has not been used in the last 3 years, in which case it would then expire on December 31st. And you probably won't know that until the return is rejected because the ITIN number had expired. And then the site coordinator will have to get involved with helping these people take care of that. And in another issue of TaxSlayer, when we get into slides, and I think it's session 4, we'll talk about where you can refer a client to get their documents certified as accepted. Let's see here. Where are we?
Gene, I would just add one other thing. If you see the 9 starting there, don't be afraid to get your site coordinator involved. If you're not really sure, don't remember all of this stuff, they can help you find out the information. There's a section in the 4012 that kind of explains all these expiring ones and stuff too. Okay?
Good. Thank you, Jim. This one is a screenshot from the practice lab. We're entering a W-2, and you could have a client who comes in with a W-2, but they have an ITIN number. So you know they have an ITIN number. And there is a spot on the W-2 form where you're going to put their ITIN number instead of their Social Security number. And that's perfectly fine and appropriate. In your 4012, there is, I think, 2 or 3 pages that deal with how to address names on Social Security or ITIN cards and how to enter it in TaxSlayer. So the typical ones I run across are on this page, Joseph, Korn, and Mary Smith. So first name field, last name field, etc. Then down there at the bottom, first name unknown. Now, I've never run across a first name unknown, but if you had to enter it, you would type in FNU, and then the last name would be Smith. So That's kind of strange, but apparently there are some clients somewhere in this country that applies to. Here are some of the ones that we run into. John Big Eagle. We have a lot of Native Americans around the valley who come to our sites and they want to file there, and they might have a name that doesn't fit what we would might consider the regular first and last name. So the IRS has a suggestion for first name field and last name field. The same for names that are more of an Asiatic descent. And frankly, I've never had a real problem with first name and last name fields, because whatever's on their Social Security card is what I type in. Okay, that's named, address, Social Security, ITIN numbers. So now we're up to dependents. This is the second decision that you will have to make that's really important to TaxSlayer software. You can be one of two things. You can be a qualifying child dependent or a qualifying relative dependent. And so there are two different sets of tests for this. In your 4012, there are some pages that deal with this and lay it out and tell you what those tests are. We're going to go over those tests in just a second. Qualifying child or qualifying relative. Now, a taxpayer's spouse is not a dependent. An example could be child, stepchild, brother, sister, or parents. If they're not a qualifying child or a qualifying relative dependent, they could be a other dependent, and that would give them a credit of up to $500 if they were an other dependent, but not a child or a relative. A qualifying child dependent cannot be claimed by another taxpayer. Only one taxpayer per dependent. Now, for qualifying child or qualifying relative, there are three tests. Both of them must pass these three tests. First off, a taxpayer who may be claimed as a dependent by another taxpayer may not claim anyone as a dependent on his or her own tax return. If you have a dependent and you have a client sitting across from you or next to you, and they say, well, here's my dependent, and you ask them, are you a dependent? And they say, oh yeah. So you have a young child, I shouldn't say this, a young adult living at home with their parents, and the young adult is now a father or a mother. If the parent is claiming the child as a dependent, then that child may not claim their child as a dependent. The second one is a joint return test. A dependent or child cannot file a joint return with someone else. And you have to be a US citizen, a US resident alien, or a US national. Born, died, or adopted during the year also counts, but foreign exchange students, not.
But something on that last slide that we sometimes miss is that US national thing. It kind of covers children or dependents in Canada or Mexico do count. And I'm finding more and more of that. You know, you have, especially with Mexico, you know, the kids are here working and taking care of their parents in Mexico. If they meet all of the other tests for that, they might be able to claim their parents in Mexico, or a child lives, you know, with another, whatever, you get the idea. You know, Mexico and Canada count for this test.
So those three tests are required for either children as dependents or relatives as dependents. But then, in addition to those three, if you want to be a qualifying child dependency test, you have to pass this one as well, the relationship. son, daughter, stepchild, foster child, adopted child, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of them. Descendant of any of them. So if your son is a dependent, it could be your grandson or your granddaughter. It could be considered in that as a child dependency test.
I'm going to also, if I can step in 1 second, just in general in the tax law, there's lots of portions of the tax law that talk about this relationship. We're going to find it for the earned income tax credit, for the child tax credit. We're talking about the dependency one. And they define this relationship thing that could include, it might just be a lineal thing, father, son, grandchild, grandfather or whatever, all in a line, or it could expand out. Well, it could be your brother-in-law, it could be your cousin, it could be your sister-in-law, your aunt and uncle. There's different definitions at each part. Be sure to go look it up. Don't assume you remember exactly what it is, too.
The next test is for child dependency is their age, under age 19 and younger than the taxpayer. But if they're a full-time student, they have to be under age 24. Now, IRS, this is IRS speak, under age 19. So the question you have to kind of keep in your mind is under age 19. No, that means they can't be 19. They are actually 18 or younger. So under age 24 means 23 or younger. And they can be any age if permanently and totally disabled. And the residency test, lived with the taxpayer more than half of the year. Children who were born, died, or adopted during the year. And the support test provided more than half of their support. So those are the tests for child dependency: relationship, age, residency, and support. Then you had the first three for any kind of dependency, and now this is for a relative who is a dependent. First off, well, if they're a relative, they're not your qualifying child. Because if they were your qualifying child, you'd have them already listed. But this is the member of the household if they lived with you for the entire year. So it could be a niece, a nephew, an aunt, an uncle, related by blood, or it could be a relative, grandparent, step-parent, stepchild, etc., as long as they lived with you the entire year. For dependency, for child dependency, it's half the year. For relative dependency, it's the entire year. And then we have the gross income test. Their gross income for the year must be less than $4,300. At $4,300. And the support test, you provided more than half of their support. So remember, for the relative test, that child could be a grandchild or stepchild. For the relatives, it could be father-in-law or mother-in-law or daughter-in-law or sister-in-law. It could be a blood relative, uncle, aunt, nephew, niece. But if it's others in the household, then they have to have lived in the household for the entire year. And it's that entire year or the 6-month rule that kind of separates this out. So this screen I kind of like because it kind of reminds me all at once of all the tests. The top 3 numbers are the tests that are required for any kind of dependency. You can't be claimed by another as a dependent, you can't file a joint return, and you must be a citizen or a resident of the United States. If you pass those 3 tests, then for the child, you've got test 4, 5, 6, and 7. Have to have a relationship, have to have an age under 19 or under 19 and 24 if student or disabled at any age, residency more than half of the year, received support more than half of the year. On the other side, for relative, it's not your child, member of the house all year, and your gross income has to be less than $4,300, and you have to have received more than half of your support from the taxpayer. So on one screen, I've got all the tests that are required to determine dependency. Now, The children of divorced or separated parents. Well, we get all kinds of questions about who can claim them, who provides more than half their support, who has custody of them, and then the release of claim to exemption, and who has the greater AGI. The bottom line here is, even though I'm going to cover some of these screens, almost everybody who I have seen that comes in and they've got children and they're divorced, they come in and they bring with them their divorce decree. They have it in writing. They're used to it. The only times I run into problems are people who got divorced for the first time that year. And it's like, they're not quite sure. So sometimes they have to go get things to show. But for, I guess what I would say, my report of what I see at Vita sites is that it's not hard to deal with divorced or separated parents because they have the documentation. They know what they're doing when they come to us. Only one person can claim the child as a qualifying child for all of the tax benefits. The tax benefits cannot be split. So all of these credits go with that child and only one parent gets them. If the child meets the rules to be a qualifying child of more than one person, then there are tiebreaker rules. And they have special rules for divorced or separated parents. And we'll get back to some of those in a little bit. Here's that worksheet for determining support, the main home. Taxpayer must pay more than half the cost of keeping up the home. Home must have been in the main home for more than half the year. Most of the time, and I would say like 98% of the time, I have clients who come in and they'll say, I'm claiming him as a mother and a daughter are living together in a home. And the mother says, I'm claiming the daughter as a dependent. Well, who owns the home? Who's paying the mortgage? Who's paying the rent? Who's paying the utilities? If the answer to those three questions are the mother, then more likely, even if the daughter's earning more money, then I tend to say, well, then that's probably you. But if it's the daughter comes in and says, no, it's my house, it's in my name. I pay the mortgage on it. I'm paying the property taxes on it. But my mother is buying the food. Okay, then without going to the worksheet, I can pretty well say, yeah, the daughter's probably the taxpayer and the mother's probably the dependent. We have had occasions where we've had to come back to the worksheet and go through this worksheet to determine who is the dependent. Here's the tax layer screenshot where you would put in dependent information. So up here, you got your filing status, then your personal information, and now you're at the dependents and qualifying person. And you type in their first name, and once you type in their first name, tax layer automatically fills in their last name of the tax client. You may have to go back and change that. Then you'll have to put in their date of birth and the dependent's social security number and their relationship and the number of months the person lived in their home. And then you need to check these questions. Were they over age 18 and a full-time student? Were they disabled? Is this qualifying child not your dependent? Do you wish not to claim this dependent for earned income credit purposes? So this is where you fill in the dependent information. Now, once you've done that for the person, you can always come back up here and click on add a dependent to add a second one or a third one or a fourth one, and then click continue once you're finished with that. Okay, back to the children of divorced or separated parents. A child is usually considered a dependent of the parent who has custody of the child for the greater part of the year. That's the custodial parent. And that's true even if the non-custodial parent provided more than half of the child's support. If the child received over half their support from a third party, neither parent can claim the child as a dependent. It's possible that maybe grandparent provided more than half the support. Now, what we see most of the time, at least I shouldn't say me, I'm going to have to say me, the custodial parent can agree to allow the non-custodial parent to claim the child for a dependency by signing Form 8332. But that statement has to be attached to the non-custodial parent's return. So let's take the example, mom and dad have split. The child is living with mom, but mom says that in the odd numbered years, like 2021, dad may claim the child as a dependent, so that dad's status, filing status, instead of single, becomes head of household. That gives him a greater standard deduction. But that statement has to be attached to dad's return. And most of the time, what I've seen is the parents who come in where they have this agreement that the one parent can claim one, sometimes it's one parent can claim one child and the other parent can claim the other child, or the other two children, etc. In odd years or even years, then they all come in and they bring their Form 8332 with them or their divorce decree. And so all we have to do is click on that Form 8332 to bring it up. So when a non-custodial parent is claiming a child, they're going to have to attach their Form 8332 or their divorce decree if it's between 1985 and 2008. And for any divorce decree executed after 2008, it's mandatory. I should also point out one of the things that well, we don't run into it. At least I haven't run into it yet. Scope of service. Out of scope is any divorce prior to 1985. Now, the reason I say we don't run into it, I volunteer with ARP. And so I have some 80 and 90-year-old women and men who have been divorced, and they got their divorce before 1985. And I can't do their divorce for some reason. I don't know what it is, but apparently federal law changed how we handle divorce in 1985.
And the reason is it allows you to, if you file a copy of the divorce decree, well, no, that's only for dependents. I don't know either, Gene, now that I think about it. I'm sorry, I don't.
I was counting on another pearl of wisdom from you, Jim, so I'd learned something new. Okay. So bottom line is, I know some of you are kind of glazed over at this point. You're always thinking, I don't know how I'm going to remember all these rules. Well, you don't have to remember the rules. Tab C in your 4012 walks you through the tables to make those determinations. Your 4012 has all of those charts that you'll use on most returns. And the bottom line is, once you go through the charts and figure out, make your determination, you can always go check with your site coordinator and say, did I do this right? And as we work on this, we gain the experience to say, oh yeah, I know how to do this. Now, one of the things to remember is a taxpayer may be able to claim a child or family member who doesn't live with them, but they live in Mexico, or they live in a retirement home. I think that was one of the questions last year. We had a person who was paying for residency payments for a parent who lived in a nursing home in another state. And the taxpayer may be able to claim an adult child if the child still lives at home and made less than $4,300 last year. So dependence is a difficult area to determine, but just like filing status, if you determine filing status and dependency, the software has a whole list of calculations that automatically come into play. And so from then on, as you enter the tax documents like the W-2 and the pension payment, 1099-R, et cetera, then the software knows how to handle those numbers based on what you said for filing status and dependency. For example, Dave and Tanya live together. They're not married. Tanya's son, baby Zeke, lives with them. Dave is not baby Zeke's father. Tanya made no money last year and is not required to file a tax return. But who can claim baby Zeke? Well, you would think Tanya could claim baby Zeke because she's his mom, but she didn't earn any money. So who's paying for the support? Dave could claim baby Zeke as a qualifying relative, not a qualifying child, but a qualifying relative. But he also may be able to claim Tanya as a qualifying relative. Marie, 18, earned $4,000. Her father provided more than half of her support. If all the other dependency tests are met, can her father claim her as a dependent? She's 18. She's under 19. We use the qualifying child rule, so the gross income test does not apply, so her father can claim her as a dependent. Whoop. I shouldn't put this slide in there because it makes you think that I'll never understand taxes. And yet, the bottom line is the IRS limits what we do so that we're dealing with moderate to low income families earning $58,000 or less per year. And we're trying to get them their maximum credits. So we don't have to deal with farm income, and we don't have to deal with depreciation. So we don't have to deal with 3.4 million words. This is the basic, I guess you would call the form of taxes. And what I'm trying to tell you here is this follows the 1040 form, and it follows tax slayers menus. We deal with income, then we subtract all those adjustments to come up with adjusted gross income. And then we subtract all the deductions like standard deductions or itemized deductions to arrive at taxable income. And that is exactly what the 1040 page 1 is. It has the basic information at the top, and then it has a number of lines that deal with income. And then it has a number of lines that deal with adjustments, and it gets you the adjusted gross income. And then there's a couple lines that deal with deductions, standard or itemized. And at the bottom of page 1 of the 1040 form, you come up with taxable income. Jim?
Yeah, and Gene, it's getting pretty close to 2:30, and this is probably a good time before we dive into income.
Excellent.
This
Let's
is
take a
probably
break.
a good time to take a break.